Hello and good morning, everyone. Welcome to the latest in our Pulse Advisor webinar series. My name is Paul Foreman, International Sales and Technical Manager at Novia Global. I'm delighted that today we're going to be joined once again by Dr. Chris Mellor, Head of ETF Equity and Commodity Product at Invesco. In a previous session, Chris did run us through blockchain, what it is, how it has the potential to transform the way that assets are utilized, etc. Moving on today, Chris will expand further on the theme and show us how an investor can get exposure to this revolution through ETFs. And in particular, he'll be discussing today how a thematic index is constructed, what role a thematic investment like blockchain can play in a portfolio, and how a block index works, what sort of exposure it offers to your clients, and the key characteristics of the index. The session this morning is anticipated to take in the region of 30 minutes, and as always, we'll be able to take questions at the end. There is a button at the bottom of your screen, so if you do have any particular questions, please pose them through that route, and we'll cover them off with Chris afterwards. So that's enough from me. Over to you, Chris.
Perfect. Thank you, Paul, and thank you for inviting us back to speak to your clients. So as Paul said, last time we spoke, we talked about, if you like, the investment case for blockchain and what it is, how it works, and what it does. Today we're going to cover off a little more detail about actually how you can get meaningful exposure to that theme. I'll just slip past the important part of the slide, which is investment risks, and get into the meat of the discussion, which is starting off by talking about thematic investing more broadly before we drill into the blockchain example. So first of all, what is a thematic investment? Well, as the description there says, it's an approach to investing that is identifying companies that are exposed to a strong secular growth theme, very often based on sort of long-term transformative trends. And you can see some of the sort of ideas behind themes that we've seen in the market in the last decade or so, whether it be technological innovation, and blockchain is obviously a very good example of that, healthcare developments, demographic changes, sustainability trends. There are any number of long-term structural trends that it's possible to take advantage of in terms of investment allocation. It's been a strongly growing part of the ETF space, as you can see on the right-hand chart here, with there are now around about 180 different products listed in Europe that you can choose from that are exposed to particular themes. And we've seen assets currently stand at just under $40 billion, having reached almost $50 billion at the end of last year. And we've seen pretty significant inflows into these thematic products in recent years as well. More than around $10 to $15 billion a year for 2020 and 2021. Things have slowed, perhaps unsurprisingly, in the more difficult market environment that we've seen this year. But it's worth saying that we are still seeing inflows rather than outflows, as you may have seen in other parts of the market. In terms of the role they play in a portfolio and why people invest in a thematic, well, I guess the why is pretty obvious. A long-term, stronger growth theme. The expectation built into this is that as an investor, you should be expecting higher returns from this type of investment. Compared to a sort of a broader market exposure. It is worth saying that you should also be expecting higher volatility of returns. They tend to be more concentrated portfolios with a greater degree of variability in performance. But you also, on the flip side of that, you also tend to benefit from a lower correlation with broader assets as well, which can give overall a better risk-adjusted return. I've picked out an example here. I know I'm talking about blockchain today, but I thought I'd pick another B and talk about biotech. And one of the reasons I've chosen this is it's one of the longer running thematic indices that are out there. I've chosen the NASDAQ Biotech Index here, which is giving exposure to that broad biotech theme. And as you can see in the top right-hand chart, biotech over the long run, just looking at a 15-year window here, has significantly outperformed the broader equity market. So the purple line is the biotech index. The dark blue line at the bottom here is the MSCI World. And if we look at the 15-year return numbers, just under 11% per annum return for biotech, obviously significantly beats the MSCI World index over that same period. As you can see, as I said, higher volatility is also there. So 25% standard deviation versus 17.5% for the MSCI World Index. But the strength of return more than outweighs that additional risk you're taking, and on a risk-adjusted basis, you're getting a significant improvement in the return versus risk ratio. As Paul said, I'm also going to touch on where this sits in a portfolio, and you can sort of illustrate it, or I've tried to illustrate it here by looking at what's the effect of combining a portfolio of, a core holding of MSCI World with about, in fact, in this example, 80% of the weight in this portfolio is in the broad index, and then overlaying that with a satellite strategy of in this case, biotech, with a 20% weight. And you can see that combination of the two investments gives you, again, as you'd expect, better returns over that 15-year period, slightly higher volatility than the broad market, but obviously nowhere near the level of the biotech index itself. And again, a better risk-adjusted return than just the standard MSCI World Index. I've chosen 20% here. That's just purely so you can see the impact on the portfolio. The level of risk you're willing to take, the level of exposure you're willing to diversify into satellite strategies will depend on your client's preferences. But fairly typically a core portfolio of traditional broad benchmark holdings with a satellite or a portfolio of satellite thematics is often the way that investors are using thematic indices today. Jumping on to the next slide. Sorry, let me find the button. A few questions to consider when selecting thematic ETFs. And I think there are a number of questions to ask, obviously, and the starting point is, what are the questions that we would ask when thinking about launching a thematic fund? And I guess the most important question is, does the theme make sense? Does it provide the potential for long-term, growth above that of the broader cyclical global economy? The second question then is, once you've decided that a theme makes sense, is are you able to get meaningful exposure to that theme? Very often themes in their early days will, the companies that are involved will either be, the activity of those companies will be buried within a much larger, conglomerate. If you think of robotics as an example of a theme, this is a great example where there are a lot of companies that offer exposure to robotics, but it's a small part of a much bigger firm. Or the alternative is often that those companies will be a very small startup company, and that then leads to the next question, which is, you're getting purity of exposure, but is that stock investable in the sort of scale that may be required? The other question that we'll look at is, how do you weight stocks and how do you rebalance? And I'll talk about that in a bit more detail. The other questions I think you should be asking: where does it sit in a portfolio? We've already discussed that just now. But also, what's the cost of getting exposure? There are a number of ways of getting exposure to a theme. You could go with an active manager, you could go with a passive solution, but outside of just the headline fees, there are also the costs of managing that within the portfolio. What's the overall performance that you're getting is the other key question I'd be asking. Just to dig very briefly into some of those questions in a little more detail. With thematics, when we're constructing an index, and we work very closely with index providers when constructing indices for our ETF to track, the first question is, how am I identifying the companies? And you've got, broadly speaking, three ways of doing it. The first is the obvious, simple business revenue analysis. This is exactly the approach that's taken with the NASDAQ Biotech Index. It's in the biotech example, it's actually using ICB sector definitions, which themselves are built off of revenue analysis of businesses, and is giving you exposure to biotech and pharmaceutical stocks on the NASDAQ index. Simple revenue-based analysis, and works very well for a relatively mature theme. For newer and more more complicated themes, and blockchain is one that I'd give an example of that, it's often better to work with subject matter experts. So working with specialists who really understand the underlying technology or the underlying theme, and also combine that with the skills for identifying stocks that are most exposed to that theme. As I say, that's the approach we've taken with blockchain, and a number of other thematic ETFs that we offer. The final way, broadly speaking, is a sort of middle ground, I guess you would say. It's sort of a more advanced version of revenue analysis, and that's using natural language processing and machine learning to sort of scrape data from company accounts and company reports to identify perhaps harder to identify themes. It's an alternative to the subject matter expert. Second question is the meaningful exposure point. How are you measuring that exposure? As I said, some themes are accessed by specialist companies. Some themes, can be accessed via divisions of a larger business. Really what you're trying to do is design an index that will give you the most meaningful exposure to that theme. And as I say at the bottom there, often the litmus test for whether you're getting meaningful exposure is reflected in the performance of the index. Does it outperform when you're seeing an increase in activity in that space? Does it underperform when there's news flow that is sort of negative for that thematic idea? Weighting of stocks can be hugely important, and I'll go into this in more detail when I talk about the blockchain index. But you've basically got a choice between simple market cap weighting that you would normally use in a broad market index like the FTSE 100. The advantage of that is it gives a great deal of liquidity. Larger stocks have a larger weight, so and smaller stocks have a smaller weight, so you're putting less weight into stocks that typically have less liquidity in the market. But you're not really skewing the portfolio towards increasing your exposure to the theme, as again, larger stocks are often those which have exposure to the theme within smaller parts of their business. The other extreme is exposure weighting, so taking the approach of linking the weight of the stock in your index to the theme you're tracking. This obviously maximizes the meaningful exposure point, but it can potentially cause liquidity issues, and again, that's something important to take into account when designing the index. There are a few other approaches to take. You can exposure adjust a market cap weighted index, so a halfway house between the two. Or you can just take a sort of agnostic view and say, well, I've identified all the stocks, I'll equally weight them, so a small cap will have the same impact on performance as a large cap. I don't have a strong view over which is going to be the best. All of those options have an impact on the investability of the theme. Around liquidity will also impact the turnover. A market cap weighted index tends to have lower turnover than an equally weighted, for example. And then finally, rebalance frequency can also have a big impact in terms of the costs of the investment. If you're rebalancing too frequently, you're going to be potentially generating unnecessary turnover costs. If you don't rebalance frequently enough, you perhaps won't be responding to the changing dynamic of the theme you're getting exposure to. So with all that said, I'll jump into giving some sort of concrete examples in the blockchain space. So let's work through that analysis. When we think about blockchain, first of all, is the theme meaningful? Is it going to give us the long-term growth story that we're expecting? As Paul said, we discussed this in a lot of detail at the last webinar that we spoke at. So I'll just give a very short reminder of what blockchain technology is. So blockchain technology is remarkably boring when you define it. It's basically a ledger or a record of all of the transactions and balances in a given system. What makes blockchain exciting is that it applies an additional cryptographic element over that ledger. That means that all participants that are using the ledger are seeing the same version of that ledger and can agree on a same version of the truth, if you like. And academics working in this space of distributed ledger technology, which is this as a subset of, talk about truth with a capital T in many terms. And effectively what you're doing is really increasing the trust between participants in that system, which then allows you, as it says there, to bring the properties of physical asset transfer into the digital world. There are two types of blockchain, which we'll talk about as we go through, but public or open blockchain is exactly as it sounds. It's an open, transparent, decentralized system. There's no central governance other than the algorithm that overlies or the rules that overlie the system. And the process of adding transactions to the blockchain is controlled through those rules, and this is where primarily used in cryptocurrencies, and Bitcoin is a good example here. Where mining is the process by which you add new transactions to the blockchain. There's also a whole swathe of blockchain activity in the private or closed blockchain space, which are much more similar to a traditional corporate system, controlled by a central entity, and can be used by corporations to improve partnership between them, and again improve functionality and process approaches, and we'll talk about some examples of that as we go along. In terms of the investment opportunity, I think the reality is this investable? And the answer is yes. We're now living in a world where there are publicly listed companies that are seeing real sustainable earnings driven from blockchain related businesses. There's also a broader ecosystem of companies around those that are also improving their earnings through the use of blockchain technology, or supplying operators that are using blockchain technology. And it is possible to construct a portfolio, and that's exactly what we'll talk about, that offers a highly liquid exposure. So listed equities provide a very good liquid way of doing that. It is possible to have a very strong earnings focus, and that's very much the approach that we're taking with our blockchain ETF, with a real deep understanding of what's going on in the companies and the technology behind it. And it is also possible today to build a diversified portfolio, both diversified in terms of exposure to the different forms of blockchain technology and different use cases for blockchain technology, but also just diversified in the sort of perhaps the more traditional sense of a broadly diversified portfolio, under modern portfolio theory, I guess. In terms of the approach that we've taken, we've partnered with a company called CoinShares, who are pioneers in the digital asset investment space. They launched the world's first regulated Bitcoin investment fund back in 2014, and they're Europe's largest digital asset investment firm. We're working in particular with their research team, who are acting as the analysts that are looking at the companies in the blockchain space, identifying their exposure to blockchain, and then providing a blockchain category score to the index administrator, which is a company called Solactive, who are specialists in index calculations, who then turn the handle and create the index that we're tracking as an ETF provider. In terms of the blockchain industry space, the analysts at CoinShares break the blockchain space down into sort of broadly speaking 8 blocks. From on the left hand side of this slide, the most sort of public blockchain exposed or cryptocurrency exposed parts of the blockchain space, so token investments, crypto mining operators, mining hardware providers, energy providers that are have the potential to provide energy for crypto mining in the specialist ways that it's needed, and indeed mining technology companies. And then as we move further to the right, we're getting more into the private blockchain or enterprise blockchain solutions. So at the far right, you've got things like blockchain technology solutions, blockchain payment systems, and then in the middle there, blockchain financial services, which sort of bridges the gap, both using private blockchain but also supplying the public blockchain space. To give you some examples of what we're talking about here, to pick out some company examples, at the blockchain technology solutions end, at the private blockchain space, companies that you'll recognize will be companies like Oracle or IBM that are particularly active in this area, and we'll talk about them in a bit more detail. But for example, Oracle is now using blockchain technology in their their standard database offering for their clients. They're also using it in their own accounting systems in order to speed up account processing and reporting. IBM is a slightly different use case. They're obviously one of the world's largest technology consultant businesses. No longer making hardware, they're very much in the consulting space, and they offer one of the largest consulting businesses that specialize in blockchain technology, and it's actually IBM's consulting team that sits behind a lot of the private blockchain use cases, things like the food trust network that tracks the supply chain of the food suppliers and retailers. Or indeed, container shipping is another example from AP Moller Maersk and their compatriots who are building a system to track container shipping movements much more effectively. As we move down, things like blockchain financial services, that includes companies like the CME Group or Monex, and again we can talk about those in more detail. These are companies that are involved in broking, trading, dealing, quoting, market making in the exchange and exchanges and clearing of cryptocurrencies and broader financial services linked to blockchain technology. Blockchain payment systems is the next one down. Again, companies like Block that many people will recognize the name Square, which was launched as a payment system provider, allowing small businesses to link their smartphones to a payment device to take transactions. They've grown so much more since then. They're now a software an accounting provider, and also allowing and enabling the use of cryptocurrencies in payment systems as well. At the other end, things like mining hardware, mining related activities. There are a number of companies that are involved in mining operations, for example, Hive or Bitfarms are good examples. So directly exposed to cryptocurrency mining and paid in cryptocurrencies, and most closely linked perhaps to cryptocurrency performance. Linked to those are the hardware providers, so specialist chip companies, TSMC or Canon, that are providing the materials that allow and enable cryptocurrency mining, and indeed, energy providers. Very often we'll find people look at this list and say, "Hang on a minute, what's Rio Tinto doing in a blockchain-related ETF?" And the reason they're in there is that actually, they hold, if you like, isolated energy assets which they've built for their aluminium smelting business. Very often, hydroelectric dams in the middle of nowhere, and there's a lot of similarity between the aluminium smelting business and the Bitcoin mining business, which is to say, they both need energy assets, and they can both use those energy assets a long way from civilization. Most energy assets need to be close to where you're using them. And a lot of these hydroelectric plants for aluminium smelting are miles from cities. And if aluminium smelting is no longer viable, then that energy asset is sitting idle. And it's cryptocurrency mining is a potential way for a company like Rio Tinto or Alcoa to monetize those assets, and also provides a useful eco-friendly source of energy for cryptocurrency mining. So we talked about some examples there. Let's talk about how you get exposure. So the first step in getting this exposure is this analytical step. So the analysts at CoinShares are assessing companies based on the 5 criteria that you can see on the screen. They're assessing first of all, the significance of the earnings related to blockchain for that company, linked to using financial metrics, market values, understanding the value that the strategy that they're applying, and how much resource they're allocating to this. Secondly, looking at what's the long-term growth potential for the blockchain earnings based on the addressable market size, and how meaningful or how capable they are of delivering on that strategy. Thirdly, what stage of development is that activity at? How far along the track are they? What sort of track record do they have? Fourthly is their competitive positioning. So are there other providers out there that are doing the same thing? Do they have strategic advantage? How concentrated is the market? And then finally, how sustainable is this business? And that's sustainable from the sense of, how long can this continue to operate and how profitable can it be? Not necessarily how sustainable it is from an ESG perspective. But taking all those 5 pillars into account, they're then assigning an overall blockchain category score from 0 to 5, or 0 being not included in the index, 1 being the lowest sort of meaningful exposure, and 5 being a sort of core exposure of this business. The index then works by taking those blockchain category scores that you can see in the middle block here, from coin shares and feeding them into the index approach. The starting point for the index is obviously defining the universe. So this is publicly traded companies in developed and select emerging markets that are participating or have the potential to participate in the blockchain ecosystem. As we've talked about, those stocks are then scored, and then the index is constructed by first of all filtering based on liquidity. So based on the category score, we'll have a different liquidity threshold. So we're willing to take slightly lower liquidity threshold for more focused stocks, and then we'll then weight the index, or the index provider will then weight the index based on that blockchain category score, but with some scaling effects for liquidity, for ownership limits, and for our UCITS constraints to ensure investability in the fund. That index is rebalanced and reconstituted quarterly, so it's a regular update on how the stocks are doing, in order to ensure relevance over time as well. I'm going to skip over a few slides just in the interest of time, and we'll just focus on what does the index look like and how does it do. So what does it look like? Well, you can see the largest holdings in the index as of the last rebalance date, which was at the start of August. So the largest example in the index here is Monex Group. It's a stock with a category score of 5, which equated to just under a 5% weight in the index. Monex is a great example of a blockchain-related stock that is exposed to public blockchain, so cryptocurrency usage, but it's exposed through its offering as an exchange. So Monex Group is a Japanese financial company that actually rescued and got involved in the blockchain space by rescuing a company called CoinCheck, that was an unregulated exchange in Japan, was subject to a hack, and was basically going to go bankrupt. Monex stepped in, and part of the solution to CoinCheck's problem was a requirement from the Japanese regulator that CoinCheck become part of a regulated entity, which Monex Group is. So Monex Group now owns CoinCheck, which is the largest cryptocurrency exchange in Japan and one of the most profitable, run as a regulated entity within a regulated group, and has been a significant boost to Monex's performance in recent years. In terms of the broader category exposures, as you can see, finding companies with a core exposure is very difficult to do. There are currently 2 stocks in the index, but with just under 10% weight, and we now have a pretty significant number of significant and moderately exposed, so a stock score of 4 or score of 3. But it is worth saying that there are still a large number of stocks in the index with a relatively low exposure score, primarily because the part of the blockchain exposure is to a relatively smaller part of the business. But that you can see the impact of that weighting approach, weighting by score, means that although in terms of count, around 2/3 of the stocks in the index are in the developing or potential bucket, less than 50% of the weight in that index is in those lower scoring parts of the market. There are a few examples of stocks here, which I'm going to skip over. We've talked a lot about the stocks. Just to give you an idea of what the index looks like, it's pretty well diversified in terms of size. So 50% or just over 50% of the weight in the index is large cap stocks, and then pretty equally spread between mid cap and small cap in terms of the rest of the weightings. So you're getting meaningful exposure to new up and coming companies, but also enough strength and depth in the larger companies as well. In terms of exposure to blockchain activities, you can see there that the largest exposure is towards blockchain financial services and blockchain technology solutions. If you add them up, the rest are perhaps more directly exposed to cryptocurrencies. And if you add up the exposures, we normally talk about sort of a rule of thirds. Perhaps it's not a rule of thirds, but it's an outcome of thirds, which is that typically you're seeing about a third of the weight in direct crypto-related activities. A third of the weight is in sort of more pure play private blockchain activities, and then a third of the weight is in companies that have their finger in both pies, as it were, and are involved in both sides of the blockchain activity. Again, in terms of exposure, again, reasonably diversified in terms of sector exposure, obviously, as you'd expect, dominated by IT and financials, given the use case for blockchain, but also there's a number of companies in things like communication services, materials, industrials, etc. So it's not purely IT and financials. And again, from a country perspective, it's a broadly diversified global benchmark that we're offering here. Significant exposure to the US, as you'd expect, relative to the MSCI World, slightly underweight US, a pretty meaningful exposure to the likes of Japan and Korea and Taiwan, and obviously a higher weight than you'd expect in the broad market for those. And that's a reflection of where the fastest development and the earliest development of blockchain technology has been taking place. But again, a broadly diversified geographical spread. And then finally, just to talk about performance, what is it that you're buying? What is it that you're getting? I said right at the start that you can often see whether a thematic index is doing what it should be based on whether it's performing, either outperforming or underperforming at times when there is activity changes in the underlying theme. And I think you can see quite clearly in the top right-hand chart here that definitely applies for the blockchain index that we're tracking. So the dark blue line here is the blockchain index relative to the MSCI World. So when this is going up, the blockchain index is outperforming. When it's going down, the index is underperforming. And plotted against that on the right-hand scale is I've just used the Bitcoin price as a proxy for cryptocurrency activity, although obviously there's a lot more going on under the surface than just movements in Bitcoin price driving share price performance. What you can see is that there are a number of phases of behavior here. So in the early part of the chart, we saw significant outperformance. This is in the backtest period for the index. That actually lasted longer than the bubble that was talked about in Bitcoin back in 2017, 2018. So the bursting of the bubble happened in February 2018, and actually you only started seeing sort of meaningful underperformance in the middle of 2018 from these stocks. And then you had basically a 12 to 18 month period in the doldrums where when we actually launched the product in March 2019, nothing much happened in the Bitcoin space or in the in the blockchain space. There was a bit of a rally in crypto prices, but it didn't have any real impact on the underlying earnings of the companies. And there was no real buzz around the broader blockchain space. And during that period, the index performed pretty much in line with the broad global equity index. And we had a lot of questions from clients post the launch, which was well, it's just performing in line with the broader market. Obviously, those questions were answered when we got into 2020, and there were sort of two phases of behavior in 2020. The first was the COVID crisis itself, and the move to a much more digital and online world that we all experienced. And you started seeing outperformance from a lot of these companies that benefited from that move, that were well positioned for that move. And then the subsequent leg of outperformance in the latter part of 2020 and into early 2021, where what we were seeing here was the performance of the more crypto-related names responding to much higher cryptocurrency prices in general. Since then, you can clearly see there's been a link in terms of relative performance to crypto prices, and in particular, it's very easy to look at the latest period. So from late 2021 through to now, we've seen pretty significant drops in cryptocurrency prices, pretty significant drops in terms of relative performance from the blockchain index that we're tracking, and that's really reflecting two things. One is that a lot of those companies that benefited during the rally, have seen significant revisions for their earnings expectations. If you're a cryptocurrency miner and you're paid in cryptocurrencies, and Bitcoin's gone from 60,000 to 20,000, you've seen the absolute level of what you're being paid dropping by a third in dollar terms. It's also partly to do with the exposure that thematic indices in general are giving you, which is a much more growth-focused exposure, and rising interest rates is a pretty bad environment for growth exposure. So these stocks have also been hindered by that. Final thing I'll say is just to touch on correlations. So you can see the correlation table in the top left-hand corner here. The blockchain index that we're tracking is the first column. And you can see that this is an equity investment. It is pretty highly correlated with the MSCI World. It has basically a 0.8 correlation. It's not as highly correlated as something like a broad sector like the MSCI World Tech sector, which is obviously in the 90% plus correlation zone. So there is a bit of diversification coming, but it is still an equity exposure that you're taking. So you need to be fully aware of that. But equally, it is also pretty meaningfully correlated with the movements in cryptocurrency prices, and Bitcoin as an example, and the broader Bloomberg Galaxy crypto index there, which reflects the fact that today probably the most meaningful and investable blockchain activity is related primarily to crypto activities, although the index itself, as I've said, offers exposure to sort of both sides of the blockchain story. With that, I'll stop talking and I'll ask if we have any questions.
Yeah, thanks a lot for that, Chris. Some great views and insights into what is a fascinating and sometimes complex topic, but you certainly explained it clearly there. Couple of questions for you. Got one here from Richard in Cyprus saying that looking at some of the crypto coins, we've had hacking attempts and ransom requests. We've had coins blow up. Some of my clients are more mature and almost see this as a Wild West kind of environment. What comforts can you give them if I'm looking at this as part of a well-diversified portfolio? Asked Richard.
Yeah, so I think you're right. There have been a number of problems, bumps along the road, shall we call them? And as I mentioned in the example of CoinCheck, that's owned by Monex, that became part of Monex as a result of a hack. I think the truth is that was a hack in the early days of cryptocurrencies, and it's worth saying, by the way, the early days of cryptocurrencies. Bitcoin was the first cryptocurrency launch, and the paper for that was published just over a decade ago. So we still have a relatively short period of time since the launch, but a lot has changed over that period. The sophistication of cryptocurrency systems, and in particular the sophistication of the back office systems within the exchanges and the custodian operations has improved significantly. So I think you will see fewer hacks, fewer problems in that perspective. The other questions that you often get around cryptocurrencies is their use for criminal activities, and again, in the early days of cryptocurrencies, I think some of the statistics were quite startling. A significant proportion, more than 10 or 15% of transactions involved some form of illegal activity. Today, that number is less than 1% of transactions, and actually is comparable to if you think about transactions done in cash. Some of those are also related to criminal activities. So I think we're moving from the Wild West. The sheriff is in town. We are seeing a lot more regulation. and again, another question we often get around the crypto space is, what's the impact of regulation? Is this bad news for the companies? Well, the reality is exactly the opposite. Regulation helps bring cryptocurrencies and into the mainstream, and the regulated companies are the ones that are benefiting from that, and very often listed companies are the regulated companies in this space. So it's probably a good news rather than a bad news factor.
Great stuff. One more here from David in Portugal. Looking at the performance of cryptocurrency this year, it has underperformed considerably more than general markets. Is it a case of when markets go down, it will underperform, and when markets go up, it will outperform? Is there that kind of correlation?
Yeah, I think it's probably a bit more complex than that. So again, if you wind the clock back even a year ago, lots of people in the crypto space were talking about the fact that it was a less correlated asset with other risk assets, and we had a lovely slide showing how low the correlation was with the broader global equity market, for example. The truth is that what we've seen this year has been an increase in correlation across the board. Whether you're looking at an investment in even something as simple as treasury bonds or gilts or government debt, I think almost every asset class this year has seen significant declines, and what that means is that correlations have risen across the board, and of course cryptocurrencies have not been immune to that. So it's perhaps not surprising to see a sell-off in all risk assets affecting cryptocurrencies, and affecting cryptocurrencies with perhaps a higher beta or a higher impact. I guess the jury is out. Once we come through this period, will we see a divergence once again between cryptocurrency behavior and broader equity market behavior? I think certainly you will probably see that correlation dropping. The current correlation between the Bloomberg Crypto Index and the MSCI World over the last year is about 0.6 times. For Bitcoin, it's a bit lower. I would probably expect to see that drop. And that's partly because, again, there's a long-term story sitting behind those cryptocurrencies, which is that they are independent of government control, that you shouldn't see the risk of money printing with them. That's the big argument for cryptocurrencies, I guess, for a lot of the true believers. That suggests that as a long-term real asset, perhaps that will stand them in good stead in relative to fiat currencies. Obviously, the link to this is that our index is exposed to the performance of those crypto assets, not always directly, as in the crypto mining example. We also have examples of the exchanges themselves. Again, I talked about CoinCheck and Monex. The exchanges themselves are earning revenues based on the number of transactions going through the exchange. The CME group, which is also another constituent of the index, is earning transactions based on earning income based on the volume of futures traded on Bitcoin or Ethereum futures on their exchange. And ultimately, you could argue that those companies don't care too much about the price of the cryptocurrency as long as the volume of activity is there. So it's the impact on the broader index itself is obviously diluted.
Excellent, thanks for that. No further questions from the floor, so I'll bring your colleague Richard in. We've got Richard in from Invesco, and I know for those on the call today or those watching the video, they might want to find out more information. I believe you have an event coming up, Richard, that you can tell us a little bit more about.
Yeah, we do. Thank you, Paul, and thanks, Chris. It leads very nicely on from blockchain. So on the 2nd of November, we're hosting an in-person thematics event in London. It's a morning session. It's being held at the University of Chicago. It's just behind St. Paul's. Got 2 keynote speakers. We have Paul Jackson, who will be outlining his views on the major thematic drivers for the rest of the century. We've got Dr. Elsa Sotriadis, who'll be talking about the bio-revolution. And then from there, we've got a number of different breakout rooms. You've obviously got Chris there talking about climate crisis and the investment implications. So you'll find details on the Invesco EMEA LinkedIn page. By all means, please do get in touch with me. I can get invites out to you or colleagues that happen to be in London. But also anything to do with blockchain or anything, all things ETF, again, please do get in touch. I'll be happy to help.
Great stuff. And if anyone's on the call today wants any further details, either via myself or your usual sales manager, we'll be able to get those contacts through to Richard for you. So just leaves me to thank Chris and Richard for your efforts today. Thank you very much. And as always, we will be providing a recording of today's session within the next 48 hours. Look out for that in your inboxes. And as always, again, if you want to share that with any colleagues who you feel this might be of interest to, please feel free to do that. We will be convening again on the 17th of October for our next webinar. That will be with our partners at Canaccord Genuity. So look out for the invite popping through on your email very shortly. And also, as usual, we'll have the usual updates on LinkedIn, etc. So once again, thanks for your efforts today, gents, and thank you to you all today for tuning in. I look forward to seeing you next time. Thank you.
Thank you very much.
Thank you.